Okay, good evening, everybody. I think I'll start now. Just want to thank you all, first of all, for taking the time to join me. I know it's good morning, whatever you may be. Okay, so this is kind of our agenda for today. This is what we'll be going through. So just a little bit about myself. If you're joining this webinar, you probably know a little bit of who I am, but I'll just introduce myself again. Some analysis of the market and kind of how we see an investment strategy going forward. Plans for the future, and then we'll do quite a bit of Q&A. I do want to spend a bit more time on Q&A actually, because I do want to hear from you guys. My video is a bit laggy. I think that's part of my software, but don't worry about it. Okay, so without further ado, we'll just get started. So let's go. Okay, for those of you who've never read my bio, I have this is kind of what I put in my bio. I'm a member of Mensa, so I have an IQ of higher than 98% of the population. 3 years in investment banking, 10 years of trading experience. I have a master's degree in finance, a bachelor's in accounting, a diploma in banking and finance. I'm a certified blockchain architect. I have a corporate finance advisory license. This is from Singapore. I attended the Quantra Python quantitative cryptocurrency trading intermediate and advanced, and as of last week, I have a CISI level 3. And the truth is, none of that actually really matters, because everything you do with trading or anything you do with finance, theory is great and you need a lot of it, but doesn't mean you succeed. And that's one of the biggest or most difficult parts about finance. So how I like to pitch myself is that I trade with my life savings. So later, actually, I'll be showing you guys how much I actually have in my account. I don't like large drawdowns because it's my life savings, but sometimes it happens. And I trade global macro ideas. That's the style I've chosen to adopt. And the reason for that is because studying different styles that I see in the market, macro seems to make the most sense given the kind of tools that were given on eToro. Right now, in my current my current job, I am the business lead of financial services at OIO, which is a publicly listed blockchain company in Singapore. And we help a lot of high net worth individuals with their money and when they try and look at crypto. And I'll be transiting to an investment director role at a firm. And I won't say the name of the firm, but it's an asset management firm. I'll update you guys more when I join. Okay, so what I wanted to say when my financial services, my current job is that the tools that we use are very different from the ones that you have on eToro. So it's not a good thing or a bad thing. It's just kind of how the market is structured. So I've chosen global macro because it's less affected by these different derivatives that we use. So for example, spot and futures, there are certain things you can do in crypto that are interesting. You can use like options and things like that, but for eToro, of course, we don't have that, and I don't think it's practical to ask eToro to get that because there are a bunch of different difficulties in between. But based on that, what I feel is global macro is the most sustainable going forward. Okay, so moving on. Okay, so this is actually the reason why I do eToro, or this is why my passion for eToro. When my dad passed away, he asked me to handle the money within the family because I had my master's in finance. But what I soon realized is it's very, very hard to trust people because everybody wants to sell you something. You go to a banker, every banker wants to sell you something. And I'm sure all of you can resonate with that. Any insurance agent wants to sell you something. Financial advisors, they all want to sell you something. And the reason why they have to sell you this is not their fault. It's just the way that the market is structured. They make they make their income from fees. And that's just kind of how it is. And what I really dislike about the way that finance is structured as well is it shifts responsibility from the asset manager to each individual. And I don't think that's fair. I mean, all of you, I recognize some of you who have joined the chat because some of you have connected me on LinkedIn. You guys are not finance trained. And why are we shifting responsibility to you guys? It's not that you can't do it. I just think that, it's a better use of society's time if you can concentrate on what you are really, really good at, so we can take your mind off things like finance. But we can't trust the players within finance, then what's the point? So that's where I come in. This is where my passion is and for eToro. So I want to rethink the role of finance in the way that it works for everybody. So how can I make it as honest as possible, such that if I suffer, you will suffer with me? Or the other way around, if you suffer, I suffer more. That's even better. And that's kind of how I'm trying to position myself in eToro. The reason why I'm not doing eToro full time, or I've not gotten this message out to talk to many people about it, is because I think I'm still a bit early in this investment career. I've only been trading 5 years on eToro. This is not my experience in trading itself, but really, I think you need at least 10 years track record to show that you can maintain a certain level of profitability. So I'm 5 years too early, so I won't go out and shout about this is my passion. Okay, I go on from there. Okay, so the way that I think that I'm going to, or the way that I've approached this is really, I'm going to provide you these 4 tools that show that I'm good enough to manage your money. So one is skin in the game, like how much money do I have in my eToro account? Of course, historical proof that I can apply financial concepts. So I have a 5-year track record. My 1-year greatest loss is 10%. My max gain is 70. So you've noticed my returns, they can be quite choppy, and that's a reason for it. And I think it's because of the styles that I've chosen, it tends to be a bit choppy, but I'm okay, I'll live with that. Evidence of knowledge, like I said, I think you can still get away with 5 years track record, and just because you're lucky. And I think so. I still think I need 5 years more before I really take off on eToro. And the last thing that I really want to do on eToro is I really want to stop the selling. I really can't stand it. It drives me absolutely freaking nuts. The one thing I cannot stand beyond anything is when popular investors compare themselves to hedge fund managers and say they're better than this and this hedge fund manager. The games we play are just totally different. Please stop that comparison. It drives me absolutely freaking insane. Okay. So going on from there. Okay, so eToro is very real to me. The money is very real. So I posted this like 8 months ago that I wanted to withdraw some money for my wife's side project. So I actually withdrew some money. If you can see this tiny thing, which I can't blow up because of the format of the slides, I withdrew about 6,000 US dollars. But again, I'll be showing you my account balance a little bit, so that'll be fun. So eToro is very real for me. Again, I don't like huge drawdowns because I depend on this money. And so if you guys put like a lot of money with me as well, I feel your pain. If this goes down, or if I do well, I feel happy. You guys will also feel happy. So we're on the same boats. Our objectives are aligned. Okay, so this is what I feel is the most important thing about eToro. So I want other people to be doing what they love. As you guys know, I'm in the blockchain space, so I've met really excellent coders, like really good coders who are super passionate about blockchain, and they spend so much time looking at charts and trading, and it's so draining on them, especially during 2018 when the market just kind of came down. Everybody who's in the blockchain space was so depressed, and some of them just dropped out, even though they were super passionate about blockchain before. I really don't think that's how people should live their lives. They should really be passionate and do what they really love doing. And if it's not finance, you don't like the drawdowns, you don't like the research, you don't like the marketing, there's a lot of knowledge to acquire, then I think there's no reason for you guys to do it. It's not that you can't. I just think that if you have other passions in life, that should be the focus. And I love finance, so I don't mind doing it. Like this is my day job, my part-time job. Everything is finance and blockchain. And on the weekends, all I'm doing is researching and finding ideas. I just love this stuff. So it's it's just giving you ability to do what you love. What I don't actually try and promise people is the number of green months. I know everybody loves seeing up towards the right and just every month's profitable. I cannot promise that, and I don't think anyone should. Especially in the last 5-6 years, if you were invested in basically tech stocks, you would have seen that just upward to the right. But the second you saw volatility, like recently, you're going to have some red months. And I think it's important to consider that, and I'll get into this a bit later, that the US market has been doing very well for the past few years. It may not do so well the next few years. We don't know. But yeah, so I'll get into that a bit later. So the expected returns, I don't ever like promising this as well. I just take what the market can give me. So in the case of 2018, when the crypto collapsed, I was down 9%. Following year, I only made 0% or 0.9%. The reason for that is because I was just very long crypto. Market's price was very suppressed, and I felt that it has a long way to go. So I just realized that in like 2020. So that's how I kind of got a stellar year. And 2021 has also been a stellar year because of a lot of mispricing in the market. We take what the market gives us. We try not to chase the market. But having said that, I have improved my process slightly, as in I have refined the way that I approach the my fact finding strategies. So all that has improved. So, and I'm also a contrarian, so I don't like to believe what the market's believing, because I mean, let's be honest, I'm kind of weird. I don't relate to people very well, so I would tend to be contrarian. And a lot of popular stocks that people like to buy, like Facebook or Amazon, I don't have any of them, simply because I don't understand them. Apple products, I mean, they're great, but I don't have an Apple product, so I don't understand the business very well. Okay. So this is the part about the outlook about the market. So looking at the market today, especially now, I think I'm just looking at it, it's a little bit of a down day. At least down. Yeah, we're slightly down the S&P today. So the concern for me is really that the market, when it falls, it will fall very fast. There's a reason for that. There's a lot of passive flows in the market. So meaning that a lot of people are buying ETFs. And I've been worried about this for like 3-4 years, and it has not changed since then. The market is designed a certain way, and everybody tends to be very optimistic, very bullish. Because of that, the derivatives fall in a certain direction, the passive flows fall in a certain direction. And when the market crashes, there's no one to buy the other side because there's less active traders in the market. So if you look, this is actually a chart of the VIX. Let me just get to that. Yeah, so this is actually a chart of the VIX. As you can see, the spikes recently have been very, very abrupt, meaning that there's a lot of volatility in the market. So that scares me a little bit. So if you notice, I sell very quickly. I don't have diamond hands. I don't have ape hands. I let go very, very quickly because I generally am very worried about this. Gamma flip is another thing. You guys can read about it, but it's basically saying that, you know, because of all the derivative positionings, it can fall very quickly as well. So those are things that I'm kind of cautious about. Okay, the reopening trade is just, let's be honest, it's not really there. I know that, you know, we've come a long way off the bottom, but I'm in Singapore and we have one of the most compliant people in the world, and we are kind of semi in lockdown. We have a lot of restrictions. We're only allowed to dine out in groups of 2, and our vaccine rates are very high. They're like 80%. But still, our hospitals are filling up. So COVID is not going to go away. People are still going to suffer from it. Reopening is not going to be happening for a little bit longer than expected, but stock market is still all-time high. Does that make any sense? My answer is probably not. It is what it is. People can say money printing and things like that, but reality is stock market should improve when earnings improve or when companies are making more money. That's just not the case right now. It's just going up because of capital appreciation. So that scares me. And that's also why when markets come down, I'm very fast to sell. So yeah, people say, you know, I'm weak, I have no conviction. I'm okay with that, really. Okay, so moving on from there. Let's see. Okay, so the number one, I put out this questionnaire on my eToro, and I said, you know, how are you looking at crypto? Crypto is the most interesting thing that people are looking at. So to me, as long as growth continues, growth stocks continue to grow, crypto will continue to grow. The reason for that is I think that growth stocks right now, like their FANGs, they do not make sense from a valuation point of view. This is not a valuation play, this is a growth play. I believe that crypto is the same. It is a growth play. There's a lot of things that can be done. The example I love to give is if you look at the stock market itself, so you have a buyer and seller on both ends. In between, you have a lot of intermediaries. So you have people like the custodians, you have brokers, you have all sorts of people, men in the middle, right? You actually can replace the entire process with a single Ethereum blockchain and use Uniswap. And that completely eliminates market makers and custodians and things like the CDPs and things like that. So it's actually, blockchain is actually really, really a growth story to me. It will disrupt a lot of businesses, and that's why I love it. That's why I love blockchain. It'll take many, many years to come to fruition, but we're very sure we're going to get there. It's just a matter of when. Okay, so I just wanted to give you guys this quote. So Tesla is not a good valuation metric. Let's be honest, and I'll get into that a bit later as well. But the FANGs, just Facebook, Amazon, Apple, Netflix, and Google, the average P ratio is 41.38. Sean McNeely, so this is the founder of Sun Microsystems. He said this quite some time ago. He said at 10 times revenue, if I give you a 10-year payback and I pay you 100% of the revenue for 10 years straight back in dividends, then you get back your money. And this is assuming that I have zero cost of goods sold, which is very hard for a computer company. It seems I have zero expenses, which is very hard for a company with 39,000 employees. It seems I pay no taxes, which is very hard and kind of illegal. And it seems I have zero R&D for next 10 years. And I can still maintain the current revenue run rate. Now, having said all that, right, would you still buy my stock at 64? And that was what was priced in back then. Do you realize how ridiculous these basic assumptions are? What we don't need is transparency. You don't see any footnotes. It's just basically what were you thinking? And this was when Sun Microsystems was trading at 10 PE. So now we're trading at 41 PE for the FANG stocks. And something doesn't add up. We can say the stock market is overvalued. That is definitely not what I believe in. I think that as long as the growth story continues, the market will continue to grow. But it's just food for thought for everybody. Okay. Okay, so this is another question that I got. Why do I have no Bitcoin in my portfolio? So I don't hold any Bitcoin. I don't hold Doge, Dash, or Litecoin. I did hold Litecoin for a while because I thought it was a relative value trade. But I have a very strong bias towards it. Okay, I think my computer just froze. Give me a second. Yeah, okay, sorry. Yeah, so I have a very strong bias towards smart contract-based tokens. So as long as they perform some kind of use case or can perform more than just transaction, I strongly like those. That's why I have ADA, I have Ethereum, I have BNB in my portfolio. I think Ethereum can be a bit clunky when you use it now, especially it's very expensive. So that's why I like layer 2 scalings like Polygon. I quite like Polkadot, but it's not on eToro, unfortunately. So that's something that I have personally. And of course, ADA and Ethereum is a question because ADA is very scalable, but there's no tools out there yet. So the question is, who gets there first? Does ADA get there because they tooled faster so developers can develop more things on it? Or does Ethereum get there first because they figured out the scalability problem with their proof of stake? I'm sorry, my cat was so in the way. This is my cat, everyone. Okay, and there's this news coming out of China that's very real as well. China is clamping down very hard on the crypto miners. So a lot of the mining power has been taken away from China. That is kind of a big deal because a lot of liquidity, we have this metric in crypto, it's called East versus West metric, which is comparing the Chinese inflows versus the US inflows. So if there's no more Chinese inflows, there's a lot of liquidity out of the market. But I'm also hearing stories where they're saying that Chinese are buying more and more crypto. So that is consideration because China has said many times that they're going to clamp down, but have not successfully done so because it's kind of hard to control with that bigger population. So I'm kind of on the fence here, and I think it's a bit too hard. I will hold some crypto exposure like I do now, and I'll continue to buy in if I see any opportunities that point towards bullishness. Like I said, if the stock market keeps going up, I'll buy more crypto. Recently, I've sold because the stock market has come down. All this news out of China is very real, so all that is it's not really fun. It's actually real. So yeah, that's how I'll do it. Okay, getting to the next. Okay, so I mentioned a couple of times already that I mentioned a couple of times also that the US market is gonna, if it continues to go up, I think crypto will as well. There's all this talk about inflation because of the amount of printing that's going on. What you see below is Jeremy Grantham. Jeremy Grantham is a very famous investor, and of course, above everybody knows Cathie Wood. So this inflation versus deflation conversation, and I love to have this conversation with people. So do I think that there'll be inflation because asset prices are going to go up, or will I think there'll be deflation because all these deflationary forces such as like Amazon coming in, disrupting things like cashiers. You no longer need cashiers. That's deflationary because costs go down and everything's automated. is very likely that both are going to happen to me. You're going to have asset price inflation, and you're also going to have this deflationary value. I think the people that suffer, unfortunately, are going to be the people who are not so high on the social economic class. The rich are going to get richer, and the poor are going to get poorer. But it's generally my view. So this plays well for crypto and plays well for growth stocks, and that's kind of how I see it. But again, looking at the market recently, I may change my view depending on how the market goes. Yeah, I actually did want to buy some Alibaba because the market dropped so quickly. I kind of, paused on that. So I'll get into Alibaba in a bit as well. Okay, so I've also been asked a lot about my trades, the ones that hold especially large positions. So I'll just go through a few of them. RSX. So RSX is the Russia ETF. A lot of people ask me like, why do you buy Russia? It's so scary. So this is a chart that I kind of drew up, right? So this is the RSX P ratios compared to the S&P average since 1980, which is decently high. S&P, which is the current S&P, is about 15 or 16. The Shanghai index, the Nigerian index, and Tesla. So Tesla has a P ratio around 400. The current S&P is about 20-ish. Even Nigeria is about 16, I think. I'm sorry, I didn't put the numbers here. That's kind of a mistake. But the RSX right now, the Russian index is trading at 9. So that's a single digit, even if it mean reverts. And Russia is not a emerging economy like Nigeria. It's not a frontier economy. It's really something that's a little bit more developed. It's an emerging economy. You can call it a brick economy, but it's trading so far below everything else. It doesn't quite make sense. So even if it just means reverts back to frontier economy, there's quite a good upside potential there, especially relative value to the market, especially looking at oil. RSX is very heavily focused on oil. And if you guys notice, oil has been going up like crazy. And they should benefit from it. But the stock market just hasn't shown it yet. And I think it's because people aren't looking at it. So this is, I think, one of those macro opportunities that, once in a lifetime kind of thing. So I'm just going to go in that. And as long as the stock market doesn't drop, I believe this will give us some pretty good returns. So the one below, this is, I can't even pronounce this name, is actually a oil and gas company. So this is a net stock. This is a very old school Warren Buffett. Before he started adopting Fisher's concepts, his original teacher was Benjamin Graham. And Benjamin Graham had these metrics. He said, if you see these metrics in the market, in the stock, you should buy it at least for 6 months. And his argument was this, right? The price is currently trading below its net current asset value. So at the time when I bought it, it was slightly below, but it was still a good buy. And because of that, and because it's been trading below book value, which means the price of every $1 of the stock, there's a lot more assets behind it. And because it's also generating positive cash flow, it should return to the mean. And even if it doesn't, the likelihood of the company failing is very, very low. So because of that, I happen to see this on the Guru Focus Screener, which is a great tool that eToro used to PIs to reach elite status. And I'm super thankful for eToro for giving me that tool because it helps me become a better trader. So I saw that and I was like, oh, this is kind of an interesting stock. I think it's a good bet. I didn't buy as much as RSX because RSX does contain some of this. So I didn't want overexposure. I try not to risk too much of my portfolio at one time to one stock. It can be a bunch of same factors, but to one stock, I try not to risk more than about 10%. Anything more than that, I get a bit skittish because again, it's my own money. It's not just your money. And if it goes up, that's great. But if it goes down, I do want to manage my risk. Okay, Sinopec oil. I know this is going to be a recurring theme because everybody thinks I'm very bullish on oil. That's actually not the case. What happened is that oil has came down a lot. A lot of people were buying ESG type stocks. So everyone was saying, green energy is the way to go, things like that. That at that point of time, a lot of the oil stocks got beaten down. That's why I went long oil, especially I think a couple of months ago, I closed an ETF position on that and we made quite a decent amount from that. So for Sinopec, because it is a Chinese-based stock, it has suffered recently because of all the fear of China. So if you notice, the next, even Alibaba, the next one I'm going to show, a lot of fears come out of China, and a lot of stocks have been punished. I won't speak to things like Tencent and all that because their businesses are a bit different in this nature. But I think for Sinopec, this is kind of an obvious buy to me. Because if you look at the valuation model, so what you're looking at is a DCF valuation model. So it's called discounted cash flow. This is a metric we use in finance. It's a fundamental analysis. We look at the potential returns of each stock given the next 10 years, and then we discount it backwards. So you can see here what it is there's a margin of safety for about 78%. Means its fair value is about $17 and we're trading at only, much lower. So we have a very good margin of safety. It should go up at least once this margin of safety reaches about 10%, maybe, then I think I'll kind of close this position. But when that will happen, I really don't know. And I'm very comfortable to hold Sinopec stock because it is a nationally owned company. So there's a lot of, the Chinese government does hold a lot in it. So the probability of them actually closing this or coming down hard on this is not zero, but it's not high. And also it gives a great dividend. It gives, at the time when I bought it, it was giving about 10% dividend yield. The stock is of course now up, it's about 5%. So the dividend yield is not as great, but at the time we bought it, if we still continue to hold it, we will get the dividend yield. Okay, next one is Baba. So this one is great fun. Again, it's met a lot of resistance because of the Chinese crackdowns, and I understand a lot of people are very confused by this. But I come from a Chinese culture, so we are very community oriented. So basically, we're saying that a single rich person shouldn't be more important than the whole. So that's really the message that's being shared. Whether that's right or wrong, I won't get into politics here. It's none of my business really. But what it is trying to say is that yeah, they don't want a single company having too much power over everything. It should be shared wealth. So when I look at Alibaba right now, I don't think I should value it as a growth stock. So if you notice at my valuation metrics, if you look at growth stage under this, you see the growth rate at 5%. Guru Focus actually puts it about 20 because historically they've grown about 20% every year. But I've lowered it to 5 because I don't think they're a growth stock anymore. They are going to continue to help the Chinese economy grow. Because if you think about it and you're outside of China and you want to buy Chinese inventory, or you want to get Chinese manufacturer, the only place you can logically go to right now is kind of Alibaba. There are not many alternatives. Of course there are, but Alibaba is the number one, especially for B2B. So I think that will continue to grow. They do have their cloud business, which I think is outstanding. It really has a lot of tools within there for developers. So I believe that will grow as well. I'm not so optimistic about Alipay, so that's why I've lowered the growth rate so much. And because of that, it's still trading at a relatively good margin of safety, 37%. I think it's pretty good. And I don't think it's that the stock is going to go anywhere. So I think at these rates, it's a good buy. I actually put in a buy order the other day. But because when the market opened, it dropped 3%, I was like, okay, I'm just going to wait a few more days, see how this goes. And maybe if there's a better entry or timing, then we'll do that. But right now, everyone's very shaky. I don't think this will last, honestly. I think stock markets are going to continue to go up. It's just a matter of when. And if we can get the timing a bit better, that'll be fantastic. Okay, so this is the next one, which is the US dollar. So we have two positions in the US dollar. One's the Euro US dollar and US dollar Mexico. If you guys follow me very closely, I had a US dollar CAD position the other day, so against Canadian dollar. I closed it, and of course, the US dollar strengthened like overnight, and I have no idea why. I was holding the Euro US because I said, German elections might be surprising. And it was, people are a little bit scared because now they have a new chancellor that's coming in, Angela Merkel's going out. So Euro has weakened quite a bit and US dollar has strengthened quite a bit because of the stock market as well. But I closed my CAD position, so we didn't enjoy that upside. We did enjoy the Euro US dollar upside, but not the CAD position. And some people will be like, oh, but you have a short US dollar position on US dollar Mexico. I'm like, yes, that's true. But Mexico has a great carry rate. That means if you guys look at the refunds from the carry rate, because the interest rate in Mexico is so much higher than the US, it's actually great. So on my own portfolio, I'm down about $600, but with the refunds, I'm actually only down like $400 or something, or $300 or something like that. So it's actually really, I love this trade because I'm very long Mexico. I believe Mexico has been very fiscally disciplined in their economic policies. They weren't printing as much as everybody else. They are still an emerging economy, so there are risks there that I'm very conscious of. And we're also long the stock market because of it. I do see a lot of potential, especially if a lot of manufacturing goes away from China and into like US based. I believe they will outsource some of that to Mexico, and I believe that's where a lot of manufacturing will take place. And I believe Mexico will benefit from this US China trade war. Okay, but again, the spike was happened, and yeah, unfortunately we missed out on that. But it's a good hedge against the rest of our portfolio because again, when the US stock market comes down and crypto comes down, the dollar goes up. So it's a pretty good hedge. Okay. Okay, I've been over Bava already. Why did I have another one? Okay. Okay, and yeah, so I think that's it. I've kept good time, about 30 minutes. So I'll leave the next 15 minutes for any questions if anybody has any for me.